All right, good morning, everyone. Let's do a quick sound check. Let me know if you can hear me. I have Cornelio, Jack, Malik, Satish, Steve, Tony, Javier. All right, hopefully everyone is doing well. So if you have any issues with the audio, sometimes it does happen. I think the best thing is to exit out and exit back in. What I'm going to do today, good morning, everyone, is with the brief time that we have is cover a few things, as many things as possible, answer your questions. I'll also show you some software as well. If you're interested in the Atlas line or the Trade Scalper, I'm happy to show you those as well. Before we begin, just a quick disclaimer on the risks involved with trading. Let's not trade and be risky. Understand there are risks with any type of trading, whether it's options, stocks, futures, Forex. My name is John Paul. I'm founder of DayTradeToWin. For those of you who don't know me, I do a lot of the videos that you see on YouTube and on the other platforms that exist, the blogs. And my goal is to really focus on price action. So when we look at the charts, when we look at the markets, very rarely, hey Satish, hopefully everything is well with you. When we look at the markets, I really try to avoid adding these conventional indicators. And so you can see here from the chart that I have that there is not any type of moving average or any type of MACD or bands, for example. I really just try to understand what the market is doing. And I think in the simplest form, that's the goal of price action. Looking at the candles, understanding what type of movement is occurring, and then figuring a plan to buy, to sell, to have whether a target of 2 points, 3 points, 4 points, and really understanding why I'm doing that. Why am I using this type of a target and stop? So really the focus is to have a plan ready before you jump into the trade and understand what's happening. For those of you who are new to DayTradeToWin, I invite you to come here to the DayTradeToWin website. We have a couple of things here that are new, just to briefly mention them. For example, we have the All Courses page here, which has the Trade Scalper, the Atlas line, and the new one here is the Blueprint. The Blueprint software is new. I've been teaching this method for about 10 years, but there was never any software associated with it. So when I look at the Blueprint now adding the software, it automates the entries, and it's a little bit more than just the entries. It explains for swing trading, for example. And then we have the new all-inclusive accelerated mentorship. So the only difference here between the mentorship class previously and this accelerated is that we provide you all the training videos up front, and after you learn on your own, so that there's no rush to attend the live classes. Once you're finished, you can then attend the live classes. So really the goal here is for you to learn on your own schedule, as opposed to being committed for 4 weeks or 6 weeks or 8 weeks out of your schedule to join the classes. So really that's the idea behind the accelerated mentorship. You can go as slow or as fast. You're not committed to twice a week or 3 times a week. You can do it on your own pace. Okay, so to begin, the software that you're seeing here is the roadmap software, and the software is based on the market, how it moves in a type of manipulated way where traders are pushing the market to the long side or to the short side. So what you're seeing here for the roadmap is landing in these areas, in these zones, and it tells me that I should be careful not to trade against those zones. Now it's true that sometimes it goes through the zones, and if that's the case, then we have nothing to worry about. So my goal, and we can see it happening right here, is as the market comes down and lands in this area, I'm going to avoid taking a short position until the market goes through it, and clearly goes through it, because there's going to be a problem here with taking a short trade and you're fighting all of the traders that are buying. And again, as the market went and rallied straight up, this zone here was created and the market stopped and it started to reverse. So you may ask, well, how does this work? What is the roadmap based on? Well, it's not based on any type of prior support or prior resistance. So if I look back here in history, there's nothing here that's prior support or resistance, or here, or here, or here. If I go back here a little bit more, right? So we're not looking at that. What we're looking at is a different situation. And here's the best way that I like to explain it in the classes. If you are a trader and you're accumulating a number of contracts, let's say that you're accumulating 10 contracts. Most traders, they don't just say buy 10 or sell 10. What they do is they buy or sell one at this price. And then as the market continues higher, they buy another one at this price. And as the market continues higher, they buy another one. And they begin accumulating in this type of fashion because they don't want bad fills. And there's also a problem when you buy large quantities of contracts and you just hit buy or sell, there's slippage. So they're incrementally buying or selling, accumulating a position at the best price possible. And so this may take some time, or this may be quicker under more volatile situations. But when it comes time to getting out of your position, so now let's say you're in the money at this point. So right now the market went down, and let's say somebody sold one contract, sold another, sold another, sold another, sold another. So they're selling as the market is moving, and they've accumulated, let's say 10, 20, 50, whatever the case may be. And then they say, get me out of my position. When you get out of your position, you just want to take the money and run. Typically, that's how most traders do it. They don't want to hold on to anything. They just want to get out. And they immediately dump all of the contracts that they have to get out and take that profit. And sometimes it's not the same, where if you're selling 111, you may now exit the position with 2 or 3 or maybe double what you initially entered at. But you do want to exit your position faster or sooner rather than later. So as soon as it reaches into this zone, there's going to be a massive buying back that's occurring. And that's what you're seeing. You're seeing the support in this case occurring. The market unable to go through this zone here, zone A, at least for the moment. It's not to say that it's not going to after all the contracts are cleared out, but for the moment, as soon as it reaches the first time it reaches into that area, you do not want to be a seller, because as the market reaches this area, just think about a group of traders all getting out of their position all at the same time. So that's what the software is looking at. It's looking at the amount of contracts that are currently hitting the area, and it's predicting this into the future. And so it's telling you when the market reaches this area, do not sell the market until it's clear that it goes through it. And then you can sell, then you can do whatever you want. And there's a lot of ways you can use this software. This is just one of them, using it as a filter. And the same thing here, as the market ran up here, and I'm using a 1-minute chart, so you see how fast the market ran up. As soon as it ran up into this area, this zone was already created. So it's basically indicating don't buy the market at this area. Let it close outside of it, let it break through, let it clearly come out of it before deciding to be a buyer. And so what you're seeing here is the market getting stuck here at this area, at least the first time it landed in it. Do not sell it until it's clear that it goes through it and closes outside of it. And that's what it's looking at. So now there's a new zone here that's created here below, indicating the same thing. If it reaches this area right here, the goal here is not to be a seller at this area. So as a filter, that's how we use this first and foremost, to filter out any type of trading that you're doing. Even your own type of trading. Let's say you have a method that you like, that you use on your own, and that is one way to filter out the trades using the roadmap. A second way to use the roadmap is actually creating an opportunity to be a buyer or a seller counter trend. So if I know that the market is going to reach this area and I'm not going to sell it, maybe I'll have an opportunity to buy it once it bounces off of it or off of this next zone. So as an entry opportunity, you're entering right at the beginning of the move as it turns around, as it reverses. We don't really want to pick tops and bottoms, and that's not really the case. It's these swings that I want to look at, where the market goes like this, like this, like this, like this. I want to understand that it's reaching this area at the roadmap zone and it's beginning to reverse off of it. And at that point, I can make a decision. Do I want to now enter into a trade, counter trend trading, that is? If anybody is new here to trading in the room, please tell me so I don't go too fast I'm going a little bit more into the advanced stage here, as most of the traders that I see here may already have some experience trading. But if you're a new trader, if you're an absolute beginner, please let me know, and I'm happy to slow it down a little bit and explain things a little bit more to your beginner level. If you're a more advanced trader, also let me know, and I'm happy to keep up with the speed and go at the pace that I'm going. That way I don't want to bore anybody as well. And give you another example here. So as the market begins to come down and it reaches, this is now early in the morning, pre-market. If you trade pre-market, it lands here in the area, and I know not to sell it because there's selling occurring. It hits this area, the market goes a couple ticks into it and immediately reverses. Then you have a signal here to go long. And so really the idea for the signals on the roadmap is to say I want to be a buyer. As soon as the market shows me or proves to me it can't go through the opposite side of the zone and it's reversing off of it, and it creates a signal for you. All right, Satish, thank you. And then when I look at the market landing in the next zone here, the same thing is true. I know I don't want to go short. It lands in the zone, is unable to go through it. It starts to create some type of support, and now I can go be a buyer. And the same thing is true here. As soon as it lands in the zone, as soon as it realizes that it's having a hard time going through it, I want to be a buyer. So the zones act first as a filter, then as a signal taker. Now, when I look at I got you, Sean. Thank you. So when I look at the other way to use this method, especially, or I should say the software, the roadmap strategy, the roadmap software, another way to do it is to look at what happens when the market is volatile. Can we use this to go from zone to zone? So there's a third way that I like to show people how to use this software. So let's say that the market is volatile. So you can see here, for example, the ATR, the average true range, which I use a lot on the charts, is that we are looking at the market being either slow for the moment or fast or volatile at the moment. And that makes and leads me to believe that when the market is more volatile, like a cycle, that we have the market moving further or stretching. Okay, so when the market is in a slower compact motion, usually the market just does this and this and this, and I can see that the ATR down here is usually slower. This blue line is the average true range setting of 4 that I have a lot on my videos, and I request everybody have this so you understand the type of activity that's occurring. But when the market is volatile, so for example here the ATR is much higher, it's 5, 6, 8 points, the market stretches. So you can see how large these candles are. Let me just expand this out here. How large these candles are. This one, right? These large candles here. So when the market is more volatile, and I know the market needs to stretch out or trend even a little bit further, it doesn't just flop around or whipsaw. When the market breaks the zone, I have an opportunity to enter on a stop. It's not really a breakout. I don't really consider that to be a breakout. It's really penetrating the zone and continuing through it and moving to the next magnet, the next zone. And the same thing is here. Once it breaks through the zone, I can then decide to sell it as it goes to the next zone. Now this only works when the market is volatile. It doesn't work when the market is slow, because the market doesn't really go anywhere when the market is slow. Okay. You can use it on a, Steve, you can use it on a tick chart. It's not a problem. So where we are right now, let's take a quick look. Okay, so this here is the zone that it's waiting to be landed on. So that means that as the market goes up, we don't want to be a buyer once it lands in the zone. And as the market starts to go down, I don't want to be a seller. Now it should create a new zone here momentarily. Tick charts. Let's take a look. John, do you have a trade? Let me see here. Somebody asked about tick charts. Is there a tick chart? Do you want to look at? I forgot who it was. Steve. Is there a tick chart, a time frame that you want me to pull up? I'm happy to use what you look at to show you the charts as well, Steve. So let me know the tick value. I'm happy to do it as well. So a couple things here so far. The roadmap software, 3 ways to use it: as a filter, as an entry when it reverses counter trend, and when it goes through the zone, then I can take a look at going and continuing in that same direction. Number 1. When it comes to looking at the software that exists, so we have the Trade Scalper, we have the Atlas line, and we have the blueprint. So 2000 tick, yep. So I can definitely do that, Steve. Steve wants to take a look at a 2000 tick chart with the roadmap software, Steve. So I am going to change that up. So we come here to data series, right click on the chart. We're going to go to a tick chart. We're going to go to 2000. So here is the tick chart, 2000 tick chart that Steve is requesting. This is what the roadmap is doing at the moment. A little different, just a little different with the zones. Here is the first time it lands in the zone, saying don't go short once it reaches this area. If it goes through it, it's different, right? Because then, you know, the zone is penetrated. We're not concerned with any type of support or buying back that manipulation that I'm after. And it gives you a long signal here. And it's getting stuck here at the same time as far as hitting some type of support, right? That's what you can call it. If it does go through the zone, there'll be a new zone created below it, right? So the idea here now at this point is once this goes through the zone, there it is. There's a new zone created. And it's actually telling you the same thing. If the market lands in this area, don't go short, wait for it to reverse. And if it does reverse, you'll have a signal very similar to this roadmap long, 4230. If it never reaches it, I don't have anything to worry about. If the market starts to reverse and go up, there's actually a new zone to the upside. So it's always creating and realizing if the market is going up or down, there's buying and selling, accumulating, occurring, and it creates the zone above you in advance, predicting where you should not continue on with this. Even use it as a target, right? So a lot of traders that I use that as a target. All right, so let's see what happens here. If the market lands here in this area, which it did, and let's see if it reverses off of it, if it's having a hard time coming off of it. They're not based on supply and demand, Steve. Not in that sense of it, or prior support or prior resistance. So you see the market, just to give you kind of a live example here as it happened, this zone was created. It indicated don't go short between here and here, right? That's what it's doing. Don't go short within 42.23 3/4 and 21.21 3/4. Do not enter short until it breaks through it. And once it landed in it, and also you have to consider what type of power exists. If you think about how these moves are being created, what kind of power exists to create this move? It's not just a couple of contracts, it's a lot of contracts. It's a lot of traders that are buying the market all at the same time to create a move like this. And that is the manipulation that I'm referring to when we know in advance not to enter short in this area in advance, right? So we're just cautious about it, filtering any short trades, and then we can see that it immediately reverses. Okay, Steve, let me know if you're good with that, with the tick chart. Gary, all right. All right, and now I'm not sure if anyone here in the room has the roadmap software. If you have the roadmap software, you have exactly the same thing as what I'm showing you here. There's a lot of people in the room, so okay, Steve, good. So you see, Steve, it's the same. If you put up the 2000 tick chart on your end, same exact chart, same exact zone, same exact everything. If you're new to day trading and want to learn more on the benefits of trading the markets, visit DayTradeToWin.com. Join the next mentorship class starting later this month, and subscribe to the Day Trade to Win YouTube channel. We focus on price action and work exclusively with new and beginner traders who want to learn more on how to prosper from trading.